Let's get some help breaking down this economic and wild market activity with our floor show. Really pleased to say that Market Rebellion CEO and senior market strategist Marc LoPresti is with me, as well as Bernstein Private Wealth senior investment strategist Roosevelt Bowman. Great to have you both gentlemen here in studio. Marc, what do you make of this push-pull in the market? You get a good rally, and then you get tech that drags us lower again. Have we started to figure out where the floor is in this market?
I think the answer is not yet. We're definitely starting to see some signs that the bottom may be coming, but we have to be very careful calling bottoms. People have lost fortunes calling market bottoms. Yes. But what we like to see is things like market breadth improving. We see the fear and greed index in terms of retail investors pinned pretty well in the red in the fear zone. We've got February seasonality ending mercifully on Friday of last week. We have options expiration this Friday, of course. So there's a lot of technical reasons why we're starting to feel better about things, but it's too early to call it a comeback, Taylor.
Yeah.
And so we're not advising people to jump back in. I will make one other point. We are seeing what we like to call the smart money in Market Rebellion, hedge funds and institutional traders cautiously coming back in, adding to positions and names that have been beat up pretty good.
Roosevelt, what are you seeing? Because we're all await the Fed tomorrow, but I feel like we're always waiting for the Fed. And if there isn't a decision tomorrow, maybe unchanged or a pause, is it waiting to see guidance for the rest of the year? Is it waiting to see how they navigate maybe that dirty S word, stagflation? Is it higher inflation? What are you really looking for in the tea leaves for tomorrow?
Well, thank you for having me, Taylor. I think there's a couple of things going on, and I do not envy my old coworkers in this meeting. I think they're in a tough spot.
Because you worked at the New York Fed, right?
Exactly.
Yeah.
And so I think they're in a tough spot because on one hand, the deterioration in economic activity has been broad-based. When you look at kind of real-time measures of consumer spending, those have pulled back. When you look at surveys from businesses, New York, Philly, Kansas City, and Dallas, all showing the same thing from a business capital expenditure standpoint, lower expected spending going forward, lower hiring going forward. So when you look at both households and businesses concerned about the economic outlook, that's important. The Fed will probably acknowledge that. I don't think that they're going to change their economic forecast. Right. It's just a quarter.
Couldn't you say, though, watch what I do, not what I say? Because I feel like there's been that big disconnect where the soft data is weak, but I haven't seen a big change in hard data or, frankly, even earnings estimates really up till this point.
Yeah, to that point, I think earnings estimates haven't really pulled back, but some of the hard data, we have seen some deterioration there as well. When you look at retail sales,
yes,
kind of an aggregate over the last couple months, notable pullback there. I think when you also look at the labor market and kind of some of the forward-looking indicators, so online job postings, salaries associated with those, the kind of spread between those that are switching jobs and those that are staying, that's compressed. So you are seeing some leading indicators that suggest employers have more power than employees, and that households are concerned about their job prospects. When that happens, they pull back on spending.
Marc, the big news today has been Nvidia. I've been tuned to my screen, and we're getting the Blackwell Ultra, the Rubin, Feynman's after that. There's a Quantum X chip that seems so exciting. I see on your shopping list you want more out of AI and quantum as well. Without knowing all the details from Jensen Huang, why those names, and are you sure that now is the time?
Well, now is the time goes back to your previous question, right? A lot of those names are on sale. They're on sale for a reason. It's not because AI is dead or we've stopped generating data at an exponential rate every day. I don't know about you, but I am not using my phone or my connected devices any less now than I was 3 weeks ago. Yeah, some of this stuff is starting to look cheap. On a relative basis, of course, we are starting to see buying come back in, notwithstanding even Nvidia on the news from their GTC conference today. The stock is still off. This is risk on, risk off stuff, Taylor, right? I try to make people understand that. What do traders sell when there's corrections? You sell the stuff that's up the most.
What about these comments, too, that he's saying about robots? Is that so far out into the future? Is robots something that you can get behind?
Well, I don't know. Is it farther out in the future than quantum, right? I mean, Jensen famously said at the last one of these big conferences,
15 to 30.
which was total hogwash and talking his own book, in my personal opinion, right? There's a lot about quantum separating fact from fiction. B2B quantum is not 10 to 30 years away. B2C quantum, you and I using quantum on our old devices that are not quantum capable, that is probably a decade away. But quantum is in use currently, and ironically, the same guy that said it's 10 to 30 years away announced the Quantum X chip today. So
Yeah,
that should
fair.
kind of tell you that it's there's some separating truth from fiction when it comes to the quantum world.
You know, Roosevelt, when you think of sectors, tech led the way up, and it's leading the way down since last June. Tech's the big underperformer from everyone else. I was reading a great analyst note today that said we're underwater on all of our calls because we were overweight on all these big tech. But that's okay because we're not thinking about the next 3 months. We're in this for a 5-year term. Is that what you tell your clients, that this volatility is normal, but if you want to be in tech or an AI revolution, you got to think if this is the fourth industrial revolution, that this is a 5-year game plan?
I think it's a combination of both. We've been telling our clients we're expecting slower growth coming into the year, interest rates at levels that are unlikely to persist over the long run that would push down economic activity. The trade policy uncertainty has certainly helped that along, right? And so we've seen that slower growth. So I think that leads you to more defensive positioning even before this recent kind of market decline, leaning more into healthcare, consumer staples, and then in the tech trade, broadening it out, diversifying it a bit, not being so focused on semiconductors and cloud, but looking at power, cooling, other parts of the AI trade, if you will, that are going to be the infrastructure supporting the models and not just the owners of the models themselves.
Who knew sleepy old utilities would be like an AI play, right? That is just like the joke that I cannot get over in the last year or so. Really appreciate both of you, Marc LoPresti and Roosevelt Bowman. Appreciate it.
Pleasure.